So we are starting chapter 3 right now. So chapter 3 is about chart construction. So we are studying book Technical Analysis of Financial Markets by John Murphy. So chapter 3 is about chart construction. The first topic is type of charts available. It's a So first is bar chart. It is called as bar chart because each day's range is represented by vertical bar. The bar chart shows the open, high, low and closing prices. The tick to the right of the vertical bar is the closing price. The opening price is tick to the left of the bar. In the line chart, only the closing price is plotted for each successive day. Many chartists believe that because of closing price is most critical price of trading a day, a line uh, most critical price of trading day. In a day, in line chart, the closing price is considered as a most critical price in a day trading. A line chart is a more valid measure of the price activity. So that this is open, close, high and low. So this is a line chart of Intel. This type of chart produces a solid line by connecting successive closing price. So this is line chart and this is a bar chart. This is point and figure chart. The third type of chart, it is point and figure chart. It is shown in the figure 3.3. Notice here that the point and figure charts shows the same price action but in more compressed format. Notice the alternative columns of X and zeros. The X column shows rising prices and zero column shows declining prices. Buy and sell signals are more precise and easier to spot in this chart. So this X represents the rising prices and this blocks represents falling prices. So this is point and figure chart. Candlesticks. The Japanese candlestick records the same four prices as traditional bar chart, uh, the open, the close, high and low. On candlestick chart, a thin line called a shadow shows the day's price range from the high to the low. If close is higher than the open, real body is white. If close is lower than open, real body is black. So this is a candlestick chart. This is white body. Low is high is in white body. High is greater than low. So it is represented as white, and in black body, high is less than or lesser than low is low in black body opening price is less than is sorry closing price is less than opening price. In white body, opening price is greater than closing price. So this is a candlestick chart. So this is a daily candlestick chart of company Intel Corporation. The key to candlestick chart is relationship between the open and the close. Provide some more through explanation of candlestick charting. Arithmetic versus logarithmic scale. Notice in this example that each point on arithmetic scale is equidistant. Many stock market chart services use log charts, whereas future charts service use arithmetic. So this is arithmetic scale, this is logarithmic scale. In arithmetic scale, This is arithmetic scale, this is logarithmic scale. In arithmetic scale, um, all points are equidistant. In logarithmic scale, all points are not equidistant. Construction of daily bar chart. The construction of daily bar chart is extremely simple. Horizontal axis, the x-axis records the passage of time. Dates are marked along the bottom of chart. The reason for placing the tick to right of the bar is to distinguish it from the opening price. When chartist record to the left of the bar, once the activity has been plotted, the user moves one day right to plot next day's action. Services of 5 days. So this is a daily bar chart. So bar chart on daily basis. So this is about construction of it. Then this is arithmetic scale and this is semi-log scale. Longer view of Intel using two different price scales. The chart of the left shows traditional arithmetic scale. The chart of the right shows a logarithmic scale. Notice that 3-year uptrend line worked better on log chart. Volume. Volume represents total amount of trading activity in that market for that day. The volume is recorded by vertical bar at the bottom and the chart under that's price bar. The higher volume bar means volume has heavier for that day. A small bar represents lighter volume. Then futures open interest. Open interest marked on chart with a solid line along the bottom, usually just above the volume but below the price. So this is open interest, this is volume, and this is line chart. Total versus individual volume and open interest numbers in futures. In the early stages of future contracts life, volume and open interest are usually quite small. The figure build up as the contract reaches maturity. Stock charts plot volume figures but do not include open interest. Conclusion. Now that we know how to plot a bar chart, we have introduced three basic sources of information: price, volume, and open interest. We are ready to look at how the data is interpreted. So in this chapter we studied bar chart, candlestick chart. So types of chart available we studied, which are: first this is a bar chart, then this is line, and this is a point and figure. Now this is candlestick. Then we studied about scales. This is arithmetic and logarithmic scale. Arithmetic scale, logarithmic scale. So this is arithmetic scaling. This is a logarithmic scale. And then this is volume. We studied about volume, open interest, etc. So that's it for chapter 3.